Welcome to Investify, the channel where your financial curiosity meets expert insights. Today, we're delving into a topic that's been stirring the pot in the world of cryptocurrency: the introduction and impact of Bitcoin ETFs in the United States. Let's rewind to the days leading up to January 11th of this year, a date that marked a significant milestone in the crypto universe. It was the day when spot Bitcoin ETFs, a long-anticipated financial product, finally made their debut on the US market. The buzz around this event was nothing short of electric. Investors, crypto enthusiasts, and financial analysts alike were poised on the edge of their seats, eagerly anticipating the launch of these ETFs. Why, you ask? Because they were expected to be a major catalyst in driving the market sentiment for cryptocurrencies, particularly Bitcoin. Now, let's talk expectations versus reality. Prior to their launch, there was a whirlwind of predictions suggesting that the approval of these Bitcoin ETFs would lead to massive gains in the crypto market. The hype was palpable, with projections painting a picture of an unprecedented surge in Bitcoin's value. However, reality painted a different picture. As of January 23rd, just a little over 2 weeks post-launch, Bitcoin's price told a different story, having fallen by approximately 15%. This stark contrast between expectations and reality raises some intriguing questions about the actual impact of these ETFs. Moving on to the nitty-gritty of inflow analysis, the first 12 days post-launch were quite telling. 9 new spot Bitcoin ETFs were given the green light, among which the BlackRock iShares ETF and Fidelity's ETF emerged as the frontrunners. The BlackRock iShares ETF saw inflows of around 40,000 Bitcoins, while Fidelity wasn't far behind with inflows of approximately 34,000 Bitcoins. However, other ETFs in the fray only witnessed smaller inflows. Interestingly, not all was positive on the inflow front. The BITO Bitcoin Futures ETF experienced outflows to the tune of about 5,000 Bitcoins. Even more significant was the outflow from the Grayscale Bitcoin Trust, which amounted to a staggering 67,000 Bitcoins. When we put these numbers together, the total inflows across all these ETFs summed up to around 37,000 Bitcoins, valued at about $1.4 billion. To put this in perspective, this amount represents a mere 0.2% of the total 19.6 million Bitcoins currently in circulation and about 6% of the global Bitcoin trading volume. In our journey to understand the Bitcoin ETF's less than stellar performance, we need to consider several key factors that played a role. First off, let's address the elephant in the room: Bitcoin's accessibility. Prior to the launch of these ETFs, buying Bitcoin was already quite straightforward. Thanks to crypto exchanges and stock brokerages offering crypto trading, retail investors had little trouble getting their hands on Bitcoin. This ease of access diminishes the supposed uniqueness of the ETFs, especially for individual investors. Now, let's turn our attention to the institutional angle. A major argument in favor of Bitcoin ETFs was that they would unlock a floodgate of institutional investments. The narrative suggested that wealth managers and financial advisors, previously restricted by regulatory constraints, would now be able to channel large sums into Bitcoin through these ETFs. But let's pause and compare this scenario with Bitcoin ETFs in other countries. What we find is a pattern of limited inflows in markets like Canada and the Netherlands, suggesting that the appetite among US financial advisors for Bitcoin might not be as voracious as anticipated. Another significant player in this saga is the Grayscale Bitcoin Trust, known as GBTC. Originally a closed-ended fund, GBTC played a unique role in the market, offering investors exposure to Bitcoin without the need to directly purchase the cryptocurrency. At its peak, GBTC held over 650,000 Bitcoins, accounting for more than 3% of the global Bitcoin supply. This figure is substantial, indicating a significant market presence. However, the game changed when GBTC transitioned from a closed-ended fund to an open-ended ETF. In the first 12 days following this transition, GBTC witnessed outflows of about 67,000 Bitcoins, a move that certainly shook the market. But let's dig a bit deeper into GBTC's past. The trust used to trade at a substantial premium to the value of the Bitcoins it held, thanks to the demand from investors who preferred not to buy Bitcoin directly. This demand provided unique arbitrage opportunities for accredited investors. They could deposit Bitcoin into the trust, receive GBTC shares, and then sell these shares at a premium. This mechanism contributed to GBTC's asset surge. As we continue our exploration into the world of Bitcoin ETFs, it's enlightening to draw comparisons with our neighbors to the north. Canada, which had approved Bitcoin ETFs way back in 2021, serves as a valuable benchmark for understanding the potential growth trajectory of US ETFs. The Canadian market, albeit smaller, offers insights into how these financial products might perform in a more mature market setting. As of early 2024, the three largest Bitcoin ETFs in Canada manage assets totaling around 2.3 billion Canadian dollars, equivalent to about 1.7 billion US dollars. Now, considering the size and economic stature of the US, it's reasonable to project that US ETFs could potentially amass assets about 10 times that of their Canadian counterparts. This would peg the expected asset management of US Bitcoin ETFs at approximately 17 billion US dollars. However, it's crucial to note that this projection is based on market dynamics that are constantly evolving, influenced by a myriad of factors ranging from regulatory changes to market sentiment. Speaking of market dynamics, let's delve into a more controversial aspect of Bitcoin, its intrinsic value. Bitcoin, often hailed as a revolutionary digital asset, has its fair share of critics who label it as a greater fool investment. This term implies that the value of Bitcoin relies heavily on the belief that there will always be someone willing to buy it at a higher price, irrespective of its underlying value. The lack of traditional financial metrics like cash flow or dividends in Bitcoin's valuation model supports this viewpoint. But there's another side to this coin, quite literally. Bitcoin enthusiasts often highlight its value proposition, rooted in the strength and security of its underlying technology blockchain and the power of its mining network. Bitcoin mining involves powerful computers solving complex mathematical problems to validate transactions and secure the network. This process, underpinned by robust computing power, is seen by some as adding intrinsic value to Bitcoin. As we wrap up our deep dive into the Bitcoin ETF saga, let's glance at how the crypto community and the broader financial industry have reacted. A notable example is Franklin Templeton, a heavyweight in the mutual fund world. Their foray into the Bitcoin ETF market came with a unique marketing twist, adding laser eyes to Ben Franklin in their Twitter profile picture. This move symbolized their bullish stance on Bitcoin and the broader crypto market. Jenny Johnson, the CEO of Franklin Templeton, made some intriguing statements regarding Bitcoin and blockchain technology. She emphasized Bitcoin's potential role in the evolving landscape of payment technologies and highlighted their own initiative, launching a blockchain-integrated mutual fund. However, this venture has drawn its share of skepticism, particularly regarding its practicality and the high expense ratio associated with it. In conclusion, the introduction of Bitcoin ETFs in the US market has certainly made waves, albeit not in the way many anticipated. While they have opened new avenues for investors, the actual market impact has been more of a ripple than a tsunami. The analysis of Bitcoin's value remains a contentious topic, with arguments swinging between technological innovation and speculative investment. So, what's your take on the future of Bitcoin ETFs and Bitcoin's place in the investment world? We'd love to hear your thoughts in the comments below. And if you've enjoyed this video, don't forget to like and subscribe to Investify for more insightful financial content. For more intriguing financial stories and analysis, make sure to check out our latest video. Until next time, Investify signing out.